Hello students, I welcome you all for the online session on third semester BCom Corporate Accounting subject of Bangalore City University. The title of the chapter is Valuation of Goodwill and in the previous session I have explained the various methods of valuation of shares in which I have also worked out some problems on intrinsic value of shares method. The learning objective of this chapter is to enable the students to understand the various methods of valuation of goodwill and shares. At the end of the session, you should be able to understand the method of valuation of shares under various methods. In this class, I will be covering the yield method of valuation of. In this session, we will be working out some problems on valuation of shares under yield method. Now under yield method, the profits available for equity dividends are taken into account while calculating the value of each share. And the steps that are followed to calculate the value of each equity shares are, in the first step, we have to calculate the average profits of the company. ನಾವು ಗುಡ್ವಿಲ್ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಬೇಕಾದ್ರೆ ಯಾವ ರೀತಿಯಲ್ಲಿ ಆವರೇಜ್ ಪ್ರಾಫಿಟ್ಸ್ನ ಕಂಡುಹಿಡ್ಕೊಳ್ತಾ ಇದ್ವಿ ಸೇಮ್ ಅದೇ ರೀತಿಯಲ್ಲಿ ಇಲ್ಲೂ ಕೂಡ ಆವರೇಜ್ ಪ್ರಾಫಿಟ್ಸ್ನ ಕಂಡುಹಿಡ್ಕೋಬೇಕಾಗುತ್ತೆ. In step 2, we have to calculate the profits available for dividends to equity shareholders after deducting provision for tax and various appropriation towards reserves and dividends payable to preference shareholders. So step 2 ನಲ್ಲಿ ಏನು ಮಾಡ್ತೀವಿ ಅಂತ ಹೇಳಿದ್ರೆ ಫಸ್ಟ್ಗೆ ಆವರೇಜ್ ಪ್ರಾಫಿಟ್ಸ್ನ ತಗೊಳ್ತೀವಿ, ಅದರಿಂದ ನಾವು ಮೊದಲಿಗೆ ಪ್ರಾವಿಷನ್ ಫಾರ್ ಟ್ಯಾಕ್ಸ್ನ ಡಿಡಕ್ಟ್ ಮಾಡ್ಕೊಳ್ತೀವಿ, ನಂತರ ಟ್ರಾನ್ಸ್ಫರ್ ಟು ರಿಸರ್ವ್ಸ್ನ ಡಿಡಕ್ಟ್ ಮಾಡ್ಕೊಳ್ತೀವಿ, ಆ ನಂತರ ಡಿವಿಡೆಂಡ್ಸ್ ಪೇಬಲ್ ಟು ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ನ ಡಿಡಕ್ಟ್ ಮಾಡ್ಕೊಳ್ತೀವಿ. And the resulting balance what we are going to get should be considered as profits available for dividends to equity shareholders. Then in step 3, we will calculate the capitalized profits. And for the calculation of capitalized profits, the formula is profits available for equity dividends divided by normal rate of return multiplied by 100. Then in the last step, we will calculate the market value per share by using the equation capitalized profits divided by number of equity shares. So ಈ ನಾಲ್ಕು ಸ್ಟೆಪ್ಸ್ಗಳನ್ನ ನಾವು ಫಾಲೋ ಮಾಡಿಬಿಟ್ಟು we have to calculate the value of equity shares under yield method. Then the fair value per share. So fair value per share is the average of intrinsic value per share and the market price per share. It is calculated as follows. It is the average of intrinsic value per share as per first method and market value per share as per second method divided by 2. So it is the average of the two methods of valuation of shares of the company. Now let's move on to an illustration. From the following information, calculate the value of equity shares under yield method. The paid up share capital of the company consists of 1,015% preference shares of rupees 100 each and 20,000 equity shares of rupees 10 each. The average annual profits of the company after providing for depreciation and taxation amounted to rupees 75,000. It is considered necessary to transfer 10,000 to general reserves before declaring dividend. The normal return expected by investors on equity shares from this type of business carried on by the company is 10%. So ಮೊದಲಿಗೆ ನಮಗೆ ಶೇರ್ ಕ್ಯಾಪಿಟಲ್ ಕೊಟ್ಟಿದ್ದಾರೆ ಇಲ್ಲಿ ಬೋತ್ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ ಕ್ಯಾಪಿಟಲ್ ಅಂಡ್ ಈಕ್ವಿಟಿ ಶೇರ್ ಕ್ಯಾಪಿಟಲ್. ನಂತರ ಆವರೇಜ್ ಪ್ರಾಫಿಟ್ಸ್ ನ ಕೊಟ್ಟಿದ್ದಾರೆ. ಸೊ ದೇರ್ ಇಸ್ ಓನ್ಲಿ ಟು ಕ್ಯಾಲ್ಕುಲೇಟ್ ದ ಆವರೇಜ್ ಪ್ರಾಫಿಟ್ಸ್, ಇಟ್ ಇಸ್ ಡೈರೆಕ್ಟ್ಲಿ ಗಿವನ್ ಇನ್ ದ ಪ್ರಾಬ್ಲಮ್ ಇಟ್ ಸೆಲ್ಫ್. ದೆನ್ ಟ್ರಾನ್ಸ್ಫರ್ ಟು ರಿಸರ್ವ್ಸ್ 10,000 ಅಂತ ಹೇಳಿ ಕೊಟ್ಟಿದ್ದಾರೆ, ಆಮೇಲೆ ನಾರ್ಮಲ್ ರೇಟ್ ಆಫ್ ರಿಟರ್ನ್ ನ ಕೊಟ್ಟಿದ್ದಾರೆ. ಸೊ ಇದಿಷ್ಟನ್ನು ಇಟ್ಕೊಂಡು we have to calculate the value of equity share under yield method. Now in step 1, we will calculate the adjusted annual profits. Here it is directly given in the problem as 75,000. We can take that amount. In step 2, we have to calculate the profits available for dividends to equity shareholders. So it starts from the average profits of the company after depreciation and tax 75,000. From that we have to deduct transfer to general reserves 10,000. The resulting balance can be treated as profits available for dividend. From that we have to deduct preference dividend. So preference dividends will be paid on preference share capital of rupees 1 lakh at the rate of 15%. That comes to 15,000. So the balancing amount of rupees 50,000 can be considered as profits available for equity shareholders. Then in step 3, we have to calculate the capitalized profits by using the equation profits available for equity shareholders divided by normal rate of return multiplied by 100. So here profits available for equity shareholders is rupees 50,000 divided by normal rate of return is 10% multiplied by 100. That comes to 5 lakhs. Then in the last step, we have to calculate the market value per share by using the equation capitalized profits divided by number of equity shares. Capitalized profits are 5 lakhs and number of equity shares 40,000. So the value of share will be 12 rupee 50 paise per share. Now we will move on to another illustration. Here the information relates to Gopika Limited is given to you that includes 4,000 10% preference shares of rupees 100 each 4 lakhs, 5,000 equity shares of rupees 100 each 5 lakhs, average profits before tax 3 lakhs 22,580, rate of tax 38%, transfer to be made to reserves 20%, normal rate of return 15%, and you are asked to ascertain the value of each equity share under yield method. Here also the adjusted annual profits are directly given in the problem. There is no need to calculate it. It is 3,22,580. In the next step, we have to calculate the profits available for dividends to equity shareholders. It starts from the average profits of the company, that is 3,22,580. From that, we have to deduct provision for tax at the rate of 38% on 3,22,580. That comes to 1,22,580. And the balancing figure is treated as profits after tax. From that we have to deduct transfer to reserves worth rupees 40,000, and the balancing figure of rupees 1,60,000 can be considered as profits available for dividends to all shareholders. From that we have to deduct preference dividend at the rate of 10% on 4 lakh rupees. That comes to 40,000. Therefore, the balancing amount of rupees 1,20,000 can be treated as profits available for equity shareholders. Then in the next step, we have to calculate the capitalized profits by using the equation profits available for equity shareholders divided by normal rate of return multiplied by 100. Here the profits available is 1,20,000 divided by normal rate of return is 15% multiplied by 100, that comes to 8 lakhs. And in the last step, we have to calculate the market value per share by using the equation capitalized profits divided by number of equity shares. Capitalized profits as per step 3 is rupees 8 lakhs divided by number of equity shares 5,000. Total value is 160 per share. So that is the total market value per share is rupees 160. Thank you, students.